The Bank of Canada's aggressive interest rate hikes have made borrowing money much more expensive. They're trying to fight inflation, so they make borrowing money more expensive. That's the intention of those interest rate hikes. But it means that Torontonians who were able to buy homes several years ago at low interest rates now have a tough pill to swallow as they renew their mortgages with higher payments. Local real estate expert Frank Leo joins us with tips for people feeling nervous about taking on higher mortgage payments. Frank Leo is the CEO and founder of Frank Leo and Associates. Frank, welcome to the program.
Thank you, Ed.
I think your name will be familiar to listeners of this radio station, of course. How are these high interest rates, how are you seeing them affect the home buying process right now in Toronto?
Well, it's affecting everyone, and, the reality is that the government raised the rates quite quickly. So it's somewhat unexpected, and that's why it's so important for families to really prepare for that renewal if it comes up, because the change can be quite drastic in terms of the payments.
Now, I know I won't name the bank, the lender, because I'm not trying to single them out, but I was renegotiating a mortgage well back now, probably eight years ago. And the representative from my bank who was with me, I was saying, we're probably just more comfortable with a fixed rate. She was saying, you might as well go with a variable rate, blah, 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 blah. But then she said at that point, interest rates never go up. They'd never gone up. They're never going to go up again. And I said, my parents had a house in the 1980s. I remember interest rates being credit card high. They're not that high now, but they have gone up very dramatically. And what does that mean for people who are trying to renew their mortgages now, who had been at a much lower rate?
And you're exactly hitting the nail on the head, because for new people buying a property right now, there's no problem because they know exactly what their payments are going to be at these current rates, which historically are not very high. Where the problem is the people you just mentioned who have purchased recently in the last 5, 6, 7, 10 years, and they bought to the top of their ability to pay at very low interest rates. So now when they have to renew and their rates are going to, increase by 50%, or more, even doubling, that really, really is going to hurt the family.
So when we're talking about an increase of 50%, what that means is that if you're currently paying $2,000 a month, you're looking at $3,000 a month, right? If your mortgage payment is $4,000 a month and that's all you pretty much can afford, and it goes up to $6,000, you're in deep trouble, right?
Exactly. And you know what? I urge everyone to really look at their situation, even if they're not doing anything right now. Their renewal is not up for 2 years or so, or 3 years. Just look at, talk to your bank, talk to your financial institution, find out what it would be to renew and what it would cost you, just so you have that chance to prepare mentally and look at your options.
Now, what are the options that you see for people who are in that situation right now, who don't necessarily have a lot of time to prepare because it's time to renew their mortgage, and they're looking at a stiff increase in what it's going to cost them just to hold on to the place?
There's two main categories: lower your expenses or increase your income. Those are the two main.
Right.
Yeah, but there's a lot of things that go into that. So, lowering, you can cut back a little bit, your cable bill or, your entertainment. Don't go out as much, make dinner at home. Those kind of the things. Remove one car from your budget and have only one car. Remove all cars and take the, transit if you can. Those are options. The other one is to get a part-time job, increase your job, make a move that way, or, take on, a new job that's going to pay you more money. But when you have time to plan, it's a little easier and you know what to expect. If it happens next month and you get hit with that kind of change, sometimes it's something overwhelming. So
now those pieces of advice you're giving us are essentially that decrease your expenses or increase your income. That's confronting the reality that your housing cost here is going up. So there's not a wiggle room. Forgive me, because I don't understand a lot of the details of this, but I've heard that some people who had certain types of variable rate mortgages during the term of their mortgage, rather than their payments going up, their amortization got longer. As they go to renegotiate, they don't have that option anymore, right? They're probably going to see their payments go up. Is that right?
So banks have been lenient in that regard by not increasing the payment as much, by increasing the amortization, so that allows them to continue on until the renewal. Upon renewal, they can't do that anymore, so that's going to be a problem for them. And yes, that's another concern. So they can't feel comfortable where they're at because they're going to face that change and increase in payment like everyone else.
All right. Now, how do you expect these things and other factors, like what do you see in the Toronto housing market for the rest of 2023? Is there a domino effect from this kind of higher interest rates that we're going to see play out one way or the other?
Well, anytime there's change, it's going to affect the market. So from a perspective of sellers, I mean, if someone can't hang on, other options I didn't mention, but you can rent out your basement or a room in your home to get the income and stay where you are. But still, it's going to change your lifestyle. You're not going to be living in the same way. That being said, buyers may have to also consider buying and renting out part of the home to be able to afford it, because with the new rates, things are expensive still, and that gives them other options, or buy with someone else. So yes, everything has changed. We're getting back to, if you remember, in the good old days where more than one family was living in a home, maybe that's a solution that people can live with.
All right. One more thing is, I guess, do you, I don't think you have a crystal ball, and certainly the markets will move on it one way or the other, but what's your expectation? Do you think we're going to see more rate hikes this year?
Well, I just heard today, as a matter of fact, that the cost of gasoline is going to go up, or oil, and that affects everything that we buy because everything is transported. So that's going to be inflationary, and if that's the case, then most likely there's going to be more inflation and more rate hikes to combat it.
Yeah, no, that's the tool that the Bank of Canada uses to fight inflation, and they've shown, I think, that they've got the resolve that if inflation doesn't come down, they're going to keep hiking rates. When they first did the first couple rate hikes, I heard from a lot of people saying, "Oh, this isn't going to last. They're going to come right back down," but that hasn't been the case.
Yes, this is a serious situation. I think that families everywhere should really plan ahead, know what's coming, and prepare for it, so that way they're not as shocked, and that's going to be the best course of action to decrease stress and be able to withstand the changes.
All right, Frank Leo of Frank Leo and Associates, on-hand real estate expert. Thanks for walking us through this interest rate troubles that some people are experiencing. I appreciate it.
Thanks, Ed. Continue doing a great job.
Thank you.